Hello, everyone, and thank you all for joining us during the Lytham Partners Fall 2024 Investor Conference. My name is Roger Weiss, and I'm a Vice President of Lytham Partners. In this Analyst Insights video, we welcome Lucas Pipes, Managing Director of B. Riley Securities. Lucas provides research coverage on the metals and mining and coal sectors, plus precious metals, emerging miners, and financial tech. Lucas has been recognized by Institutional Investor magazine, received a number of industry awards, and is a long-standing Wall Street veteran. All right, Lucas, let's talk about what's going on in your world. Lucas, you may have the most eclectic coverage universe of any analyst on Wall Street. I see you cover coal, steel, aluminum, gold, but then also Bitcoin miners, emerging data center companies. How do we think about these names? How are they all related? And more importantly, when in particular do you like at this point in time?
Hey, Roger. Thank you so much for the invitation. Thank you to Lytham Partners for the opportunity. Great to be here. Great to have a chance to talk about the markets and what I care most about at this time. And look, I cover a couple different sectors, as you put it. Most eclectic coverage on Wall Street. I wish there was an award for that. I think I would win it. But it developed organically, and I would say there are two key themes that unites my coverage. The first theme is power. On the one side, I have major consumers of energy. This would include a name like Century Aluminum, but also Alcoa, and then of course the Bitcoin miners, as well as other emerging data center companies. And then I've always covered the names that are the providers of fuel, namely coal. Right, when I started my career on Wall Street, I was really focused on the coal sector. At the time, coal accounted for about 50% of U.S. electricity generation. Nowadays, it's sub 20, but it really helped me understand how the power markets work, and to now speak to investors in Bitcoin miners or data center companies to help educate them on this is how power markets are structured, and these are the things you need to be mindful of. So I think on the power side, there are really interesting dynamics. On the supply side of power, you have an energy transition in the US and globally. And then on the demand side, you have dramatic increases, especially due to AI and more intense compute. And so I think, for example, aluminum, this creates tightness in the market, or moat is probably the better way to put it. It puts a moat around new development, game changer compared to what it used to be. The last 20 years in aluminum were really tough. There was a lot of new capacity coming online in places like China. When new capacity comes online, it depresses prices. I think now, with more competition for power, that dynamic is appended, and a name like Century Aluminum, ticker CENX, is really well positioned on the back of that. Predominantly, they are making primary aluminum in the US. They also have a facility in Iceland. So I like how they're positioned. There are admittedly some metallurgical coal names that I think are well positioned today. Ticker HCC Warrior Met Coal. I think they have a really good product and well positioned with growth. And then there are a couple other names on the emerging data center side that I think are really well positioned. Core Scientific, Core Z would be one example there. But Roger, I'll pause here and happy to take the conversation where you think you'd like to go next.
I think what I'd like to do, if it's okay, is stay with the power theme for just a minute. We've seen, I guess, recently, 3 Mile Island being started up again. Can you quantify the demand growth out there, and how much new demand is coming online, and kind of how do you think about that for the United States?
Yeah, I mean, those are really, really big numbers. And in that context, I hope that the 3 Mile Island announcement will make a lot more sense. So today, data center power demand in the US accounts for about 20 gigawatts. For context, the size of the California grid is about 80 gigawatts today. And we're looking at growth somewhere between 5 to 10 gigawatts per year for the rest of this decade. Um, so very, very large numbers. Um, you can actually back into the demand that comes online just from NVIDIA chips. Every NVIDIA chip has a power intensity, power rating per hour. And so you can look at consensus for NVIDIA. That implies a certain number of Blackwells being sold. Each Blackwell consumes a certain amount of power per hour. That is a net number because a data center still needs auxiliary cooling around it. So you can kind of gross it up. And so, yeah, you arrive at about 10 gigawatts worth of demand growth per year. And you mentioned 3 Mile Island. That is less than 1 gigawatt. So you think about that. You think about that. You need 10 of these announcements to meet data center demand per year. So it's a huge challenge. And it's not just the generation, it's the transmission. And like I mentioned, I like Century aluminum. Aluminum makes a great conductor of electricity. Aluminum is lighter than copper, so a transmission line ideally is made out of aluminum. So I think the power theme will create a lot of opportunities for aluminum producers. I cover metals and mining, and I like copper. And copper's getting a lot of attention for its role in energy transition. But I think the substitute aluminum is a great substitute for copper. It should get a little bit more attention on the back of this dynamic.
Well, um, let's finish up by talking about the other side of your coverage, both Bitcoin and gold side. Are they ultimately different sides of the same coin? Or do Bitcoin and gold serve different functions in a portfolio? And if so, kind of both how do you think about it, and what names do you specifically like in your universe?
Yeah, great question. I meant to mention that at the very beginning. That's the other theme is the in my coverage, right? You have the power angle, and then you have the kind of alternative currencies, and I think Bitcoin and gold do serve a very similar purpose in a portfolio. It's it is ultimately an alternative currency. Both gold as well as Bitcoin are zero yield assets. You're not earning a treasury rate on your gold. You're not earning, at least not commonly, an interest income on Bitcoin, but they're both finite in supply. So you may have heard this before. All the gold that's been mined in human history would fill a little more than an Olympic-sized swimming pool. That's it. And Bitcoin advertises, I'd say what makes Bitcoin Bitcoin and what has distinguished Bitcoin from other crypto assets is its finite supply. 21 million coins. That's all. That's as much as there is ever going to be mined. So you have 21 million Bitcoin. Sometime in 2140 or so. In all of human history, one Olympic-sized swimming pool. The supply is finite. And so if you're concerned about fiscal spending, loose monetary policy, that is your alternative. And I think that's why we've seen both Bitcoin and gold perform very well in the last decade. I think Bitcoin came to birth because of the undisciplined fiscal order in the U.S. and elsewhere. I think that created the demand for a new kind of monetary product. And so I think both gold and Bitcoin are still positioned very well. And gold has a slightly different dynamic today in that you see a lot of central banks add gold. I think this is acutely the driver behind the all-time record highs we've seen in gold in the last couple of weeks. A lot of demand from China in particular for gold. I would say in the Western world, gold demand is, from an investment perspective, has been a bit more subdued. And I think Bitcoin has actually taken the market share from gold. So you have kind of the monetary asset in kind of non-Western world is gold, and within the U.S., Bitcoin in particular is taking more and more of that market share.
And just to follow up, what might be the best way for somebody if they were interested in either the Bitcoin side or the gold side to play? Do you have any thoughts there?
So there are a couple names I'd highlight here. I'll start with the gold side. There is Seabridge Gold. Their flagship asset is an undeveloped deposit in British Columbia, KSM. It is an extremely large project. Potential project is fully permitted. A lot of early stage gold investors are concerned about what's the timeline to permitting. It's fully permitted. It's very large. It has a lot of copper byproducts. So it's a play on gold. It's a play on copper. It's in fact the largest undeveloped gold project in the world. So KSM, I think, is really unique, and Seabridge has done a great job de-risking this project over the years. Another name that I've liked is Perpetua Resources. Perpetua has a project in Idaho. It has a contribution byproduct of antimony. Antimony is a rare metal. Major defense applications. They just recently received their draft record of decision, so that's the second to last final step in the federal permitting process. So I think that project is really interesting, and I think is going to see the green light with the final record of decision in short order. There's also support from the U.S. Import-Export Bank. Right, when a project is permitted, there's a concern around, well, how is it going to be financed? In this case, you have a major backer from again U.S. Import-Export Bank. So Perpetual Resources, I think, is still really cheap, 30% of NAV. I think projects at this stage in the life cycle should be closer to 60-70% of NAV. And on the digital side, so I mentioned Core Scientific earlier, more on the data center side. I think that Core has done a really great job getting attractive access to power, de-risking their growth outlook with long-term contracts for HPC, high performance compute, which is a little bit separate from Bitcoin mining. But I think Core Scientific has been mining the most Bitcoin out of any publicly traded miners over the last couple of years. So they have a lot of scale, a lot of legacy in Bitcoin mining, but they also have done a really great job transitioning into HPC. So Core Scientific would be my go-to name to express that theme.
Very good. Well, with that, I think we are out of time. So firstly, Lucas, thank you so much again for joining us here and doing an Analyst Insights. We appreciate your both joining the conference and speaking about your coverage, the views and your expectations for some of the folks in your group and, the macros in your group. And to all the folks out there, we thank you for your interest in watching this video, and we hope you enjoy the rest of the Lytham Fall 2024 conference. Thank you so much again.
Roger, thank you so much for having me. Really appreciate it.
You're very welcome. Thank you.
Take care.